Good morning, my friends, and welcome to the Breakfast Club. My name's Darren Hancock, and here we are, Thursday, the 30th of May. Let's get at it. So overnight, Michael called an awesome low last night, hit his objective. Our son hit the objective and is doing really well on his account. I love the fact that this is like knowledge that he's passing down to the next generation, and he's building wealth and patience and tenacity and all that. So he's really going to help his son out. I think that he's really going to develop some good character in his kid, recognizing that, you don't need that 9-to-5 job, that if you have the patience and the discipline and obviously the mentor like he's got with his dad, you can create wealth. And I think that's going to be awesome for him. And I'm so happy for him. I think congratulations to Michael and his son for the success they're creating. I think this is super exciting. And as for the rest of you, oh my goodness, was there a good night last night? I got to partake in some that downward trend again last night, and put a turn on an upward trend overnight, and scored on an upward run this morning. Albeit accidental, I think. I put an order in and thought I'd closed everything down before I went to bed, and I didn't. I had a suspicion there might be an area that I could see a return on, and obviously I didn't close it down, and it took off. So it's more luck than skill, I think, this morning, but still, it paid well. So I had good fortune on my side there last night. As far as the accounts are concerned, or the markets, let's make sure we're live here first this morning. I'm in here before everybody else this morning. Hans, good morning. We're here before 7 this morning, Hans. We snuck in a little early. Welcome. Just you and me, baby. All right, let's look at NQ here. Let's start a little earlier this morning. Where's my there we go. So this little dandy reversal here, 3 o'clock in the morning, I think I ended up catching it somewhere up in here after it took this high out. The return to that high, taking that low, you got a reversal, turn into it. But I'd seen this before. You see these little there's a couple of little breaks earlier that you saw, like a consolidation. It broke above it. Well, not this particular one, but right here you see that one breaks above it, then it drops down below it. And I thought, well, I'm going to really make sure that we're above, we break market structure this time to the upside before we start getting thinking about going long. So yeah, I caught somewhere in here, and that will run. So it was about just before 8:30 this morning, somewhere in here. I think I got up and I looked up, it's like, holy smokes, bailed out right there. But that's okay. So NQ, we've got this higher time frame. Let's look at the daily here. Get my little carrot out of the way there. Let's just clear everything. So I think what I'm looking for is a return to the bottom of Tuesday's low. If we can get back into Tuesday's low, that will be 18,821. And if we can continue to push into the body, I think there's 18,876 upside. And then if we continue to push higher, then I'll see the rejection block in the old highs. But I'm still looking for an upside run today. Yeah, I'm just thinking of another scenario that if that stayed open. For now, we'll say we're still remain bullish for today because we're still, we'll look at the hourly here. So we came up, we filled that fair value gap there perfectly. Now we're getting a bit of a reaction off of that. So if we do roll over, if that does, I'm just thinking of that gap, if that stays open now on the daily that we were just looking at here, if this stays open and this is the top of the day and we see this continuation on the downside, we're going to play a couple of scenarios here. First of all, we've taken these lows, but we have not taken these lows yet. There's a lot of liquidity down here still. We're just pulling back into this range. If we look at the range that we're in right now, from the high to the low, we're just over 50%. If you take it right from where that starts there, we're 50%. So we're 50% of our range from yesterday morning. So if we get a retracement back into this fair value gap below you here, and then a continuation, we'd have to close below this level here, and we do have a slight little inversion, potential inversion here. If we trade below it, come back inside this candle, that we're inside this range, we're coming back into here on the hourly. If not, we're going to continue to push higher. We find some leverage off of this fair value gap here on the hourly. Then I'm looking for more upside prices. I'm looking for upside if we get on top of it here. Mean threshold of the, there's a swing there. Look at the mean threshold of the candle here. There's a multitude of little objectives up there. So if we just continue to find support right here, we just came up, wicked into it, filled this. If we get a continuation on the reaction here, I'm looking for a downward turn back into this level. Watch this little tiny level inside here. If we break that to the downside, and especially if we break through this candle here to the downside, which I think we will, and then look for a run back into here. We got to get through the mean threshold of this one, close below here. All right, so that's kind of like where I'm looking at now for two different directions. And we'll see how the morning starts out. Dow Jones looks like it's still heading for its it's gone through the mean threshold of this candle, which is what the objective was yesterday, and it hit it, went slightly beyond it. Now we're back into it here. So if we get a continuation now, look for these down the rejection blocks and old lows here. We do have a significant pump up this morning at 8:30. Return to order block continuation. We have taken out these lows here. Reversal. Looking for a long from here. So I don't see any I see continuation to the upside in this so far. I'm looking bullish in Dow Jones for the moment. We'd have to break this low here and take out this candle for me to go bearish again. Otherwise, we're bullish right now. Just right now, that's a 1 minute chart, so it could change. And we're going into the opening. That was the 8:30 news release. $9:30's coming, so this could be just a false manipulation. And then a continuation on the downside, which is what we overall think is heading there. But right now, inside this small little structure that we see, price action is on a bullish trend. Unless we close below here, then we're getting back into this range again, and we're looking for a discount. So watch there. So now we've closed below it, so we're changing direction. So now you're back in sync with bearish. And then if we close, so we took out that high, we're bearish up here. Into that range. Now we're going bearish again. Yeah, we're continuing. We're bearish now. Dixie. I can see what it did here. If you look at Dixie here. So we went from discount back up into premium inside this range. Hit the premium, back into the discount again. Now you want to see this come back, fill this. So more downside on US dollar today, back into here. I'd like to see that fill that and start really working through the downside of that. So if we're looking for the hourly, we should see the reversal that happened up in here. There's a small reversal right here. We finally got the fill there. So if you can't catch that one, look for the order block that initiates that run. We traded below it here on this candle. That one just wicked. Trade below, we come back up inside it right here. There's where your short is. There's where your confirmation for your reversal is, right here. Perfect entry for a short. So you see it turning up here, but you don't get your confirmation until we break this candle's low, come back, find support at it, continue on the sell side now. Now let's see if we could have found something on the hourly or the 1 minute, 5 minute chart. If you would have taken this one, traded through this, came all the way back, you would have been short here. So you go, then all of a sudden traded through it and you go, oh, I'm on the wrong side of that. Take you out, your stop loss is taken. You wait for it to trade through here a second time. This order block right here. trades through it now, you can say if it comes back to this order block, I'll get it in short. You see it right there. So if you get your high taken, wait for the whole thing to get traded through again for confirmation. And then keep your eye on that level. So if we're expecting more downside, I don't want to see that stay open. I want to see that close in for bullishness on the euro and the pound and all the forex people. So you want to see that go down. We're back inside between premium and discount now, inside this larger range. So if you come back into the midpoint of this, watch again for any type of reaction off of here for a reversal, for continuing back into that space between the two fair value gaps above you. So kind of keep those in mind. Otherwise, we're still bearish right now, which means we're bullish in these other currencies. There's your gap here. Right there, body breaks above it. We come back, trade inside it, all the way back down to the opening of the session, midnight candle. Look for higher prices. Look for pull the range here, pull your fib tool, look at 50%, continue to the upside. If you get a reversal back onto this candle here, look at that little fair value gap breaking to the upside. You gapped up, came back, found support at it, continue higher. So watch your range inside here. All the time the American dollar's on the way down. This is pulling back into that range. So look at your 50%, pay yourself at 50, move your stop loss up accordingly. That's Canadian dollar. New Zealand dollar. A little harder on the 1 minute. Look at the 5 minute here. Reversal here. You don't get it here, so look for the order block right here. The up close candle. You come into it. Continue going higher. This is interesting here. See how you could have got offside here, through here. Come back into it. And then it continues through. Closes above that. We could be running back into these ranges, which it does. And if you get short from there, you realize when it gets taken there, you're on the wrong side of it. You don't get an opportunity to get your stop loss out. You would have had to have anticipated on a higher time frame that this was the turning point. Otherwise, if you were just trading 5 minute charts, you would have got caught on that one. No, not necessarily. You would have, if you would have recognized this here, and it closed above you, you go, I'm on the wrong side of that, because now we have swing. Did not take that low out though. Yeah, that would have been an interesting play. Anyway, here's another reversal. Australian dollar was a beautiful reversal this morning. We took out these lows. You wait for a reversal and you see it right here. So you open, you go, oh, there's a beautiful spot there. If I can trade above that, I can get out just above that, but I don't take the high out here, I can return back into this fair value gap, catch it long. So it literally opens up, does not trade above here yet, trades down below into that level perfectly, gives you an opportunity to load up. Now it trades above that. So if you missed it, you say, that's okay. The next candle that comes back to this, I'm going to catch it and go long. And it happens to be right on a session open for a nice little 4-hour run higher back into this range. Pull your fib tool from high to low. Use your fib tool to get out, or look for liquidity above, resting above the market, this fair value gap or this breaker. I guess you could say this would be the overall. This one sitting inside this one, even though we do have a swing here. I would take that one myself, but anywhere inside this range, the consolidation. Oh, that's right back to the bottom of it there. That's probably more than 50% of that range already. Oh yeah, well into it. 62, almost touched 70%. That's the kind of reversals you want to see. Ones that take out a nice low, and it's a nice, crisp, clean entry. You don't want to see all that waffling around side to side stuff. You want to see it go down through it, back, give you a distinctive, hey, look, I'm going in this direction. And that's on an hourly basis. So you take that down to a 1-minute chart. Let's see where we saw that reversal happening right here. See if it's just as clean on a 1-minute chart. So you're looking over there, you have your line that goes across from the old low, and you see this on a 1-minute chart. Reverse, pops through, you don't get an opportunity to get on there. Imbalance. They're literally closing right on top of them. Takes the high, so change in direction. So we have a change in direction, and we have a break in structure to the upside. Return to the upside. So that break in market structure to the upside right here. Come back, confirm higher. I wonder if we ever get a chance to revisit that. Nope. That was it. Not such as a clean one as it was on the hourly. But as soon as you see that break in market structure to the upside, you have an indication, I suppose. Then look for a confirmation off of the high. So return to the old high of the last recent high. You break that high, return back to it, and then look for higher prices. And that doesn't always happen in these short-term ones either. But you do see the reversal down here. Then whether or not you would have weathered all that, hard to say. That would have been fun, an interesting challenge. That's a 1-minute reversal right there. That's a clean reversal. See that? Back up inside. Boom. Japanese yen. The hour seems to be giving you the cleanest entries there. Break above it. Open, come back to it. Find support. Off you go. This what we were talking about yesterday with this closing right on the space that you want to see the confirmation. So if you just close below it, come back into it, you want to get short. That absolutely closing right on it. That's the thing someone might want to do some research on. Just looking at how often do we just close on that wick up and continue on the downside. What's the likelihood of just freezing on that and then continue on the downside? Though you don't just top it. Usually you tap it and wick away from it, right? So if you freeze on it, that's an indication that you're going to go lower. Not sure. I haven't done any research on that. It would be interesting to find out what the statistically that is, that happens. Because we see that so much. When you get a level of precision now, you start to see this as, that might be a level of precision that we haven't really addressed yet. We've taken this high out. Watch right here. Keep your eye on that level there. Close below this level here. Come back to this or inside here for short. Back into this range here. And then if we blow through that, look for a return back down into here. Oil. Price of oil. All these highs. We've been trying to get back to that daily oil level I've been calling for weeks now. It just keeps running back and forth in this big consolidated mess. Makes a lower low, comes back out, finally clears these highs out one more time back into the fair value gap. Return back to these equal lows here. And we're getting a reaction off. I want to see this get through here now. Push through the bottom of that fair value gap here on the daily. Right there. Let me make this bigger here. I want to see it get through here, and we're going to start aiming for this downside objective again. Now that you've cleaned out both sides of the market, all the shorts and longs that were on either side of the market here that they were working have now been cleared out one side. We've now cleared out the other side, and we're back into the middle of the range of this consolidation with both sides of the market cleared out. Those who wanted to go long are done. Those who wanted to go short are done, or who are trailing their stops. Now we'll see with some aggression to get down into this level. Take out these guys here too. Retail would have thought this was lows all down in here. Now we're going to come back and clean them out. Because there's a lot of people who thought we were going to run for this objective here. I came back, cleaned them out. So that's my date. I'm still back to this objective on the weekly. This and this for the reversals. This reversal here was beautiful. Look at that, return right into it on a daily basis. You would have caught a massive run. Then this reversal here, this reversal here. This one would have taken you out. That wick alone would have cleared out that one. So you wait for it to trade through it again on the downside. Trades through it here, comes back up to it right there. So this one closes below it one more time, comes back into it a second time, and you can get short. You make back your losses there just in the next 2 days. That would have scared the crap out of you coming back up again. Considering we've now traded above this. And if you look at these as the swing points, we haven't taken out anything there, but if you look at those as swing points and you traded above them, you come back in inside them to go long, pull your fib tool from top to bottom, you'll be probably hitting 50% of that. You should be unloading yourself there, and then you realize, oops, it's trading below this again. At least you scaled out. That's why it's important to scale yourself out in those situations, especially when you haven't taken out any significant lows yet. You got to trust these when you take out lows, and they weren't taken. So this could be, when you don't see a low taken, look at that as a potential, just a reversal to offset or mitigate long positions to go short. Let's look at gold. What do we got for gold? $15-minute chart. 15-minute chart. We have a nice clean reversal here. Right there. You do take out the high. So you can look at the candle that initiates the run. Again, your stop has to be way down here for the 1%. Comes all the way back into that level before finally breaking higher. Come back into it one more time. We take these lows out here. You come back inside them. You trade all the way down into this one. Continuation. Choppy as hell. Not a fun one to be in if you're watching it. If you just trust that your levels are going to hold, as soon as you break your high, or 50% of that range, you move your stop loss to break even. And if you trade it, you're trading here and you're just aiming for these short little term highs. And if it returns to it again, then you get to catch another long. If you just trade these short term highs, rejection blocks, then you're obviously going to be like for here, trade back into here, take that rejection block, take that rejection block, take this rejection block. You would have trading inside those small little ranges and not overshooting your ranges. If you find yourself saying, I got beat up in here, it's because you're not trading the small little range that you're in. And you're trying to trade too big a range. You're trying to catch the big hauls every single time. If you're trying to do these long bombs, and these short little passes are what move you down the field. Bitcoin just had a nice little reversal this morning. Equal lows. Take out these lows, reversal. Body goes above, comes back inside. Continuation. Upside objective. Hit. Rejection block. Hit. Equal highs. Not quite hit yet. But if we end up clearing this high here, we're looking for fair value gaps over on the side here. Equal highs. But for now, watch this, because if we don't take that high and this becomes the reversal, look for a return back down into here for that consolidation again. We got our downside in soybeans yesterday. We're looking for a reversal. We wanted to know if it broke that high, we'd be going higher. If not, we'd be going lower. And we're still going lower. It came right up to it, hit it, but did not trade through it. We get we have a drop below the low right here. We trade back inside it here, and we continue through. So soybeans worked out for us yesterday. Corn, same situation with corn. We're looking for that fair value gap to get broken on the upside. We haven't taken anything out here. Just a false run up. There's 7:30 as your open. Now we have a break below the lows. Come back, fair value gap. We trade through that. We're going higher, bouncing right off of an hourly fair value gap here. Hit it, continue on the downside. So we're still bearish all the time. We're trading below these inversions. If we get below here, this could be the reversal higher. We'll see where this candle closes. If we do get this trade below, come back into it, looking for continuation on the downside for corn. Otherwise, this is the potential reversal right now to pull back into that range for higher. Sugar, flat. Got nothing in that one. Nothing. All right, we've traded above here. So if we come back into here on cocoa, watch cocoa here. We have this reversal right here. Body breaks above it, and this candle that initiates the run. If we trade back into cocoa right there, from here, stop loss has to go down here. Into the high, really low leverage. Anywhere inside that candle, that breaker here. Oh, do we take that low? Eventually we took the low. So we did take the lows here. That's a level I'll be looking for here, all the way down into here, which is the top of that fair value gap here. So looking for more upside on cocoa. It could come all the way down. Mind you, this is daily, right? So this could come all the way down into here. That's your go, no go zone. That's the perfect entry place right there. Your wiggle room is this fair value gap. You want to see that stay open and continue as a breakaway. You want to see that stay open. Lumber still sideways. Little piggies are still working their way into that gap. We traded above it. We come back inside it. Now, if we start getting a nice little lift out of here, see that little fair value gap here? Come back a little further. I'm looking at this area, and then obviously the fill that's left in here. It's an interesting trade. So still bearish until we yeah, I'd like to see this candle's high get taken on a close. Come back inside here, continue higher. But we still have some of that gap yet to fill. UNG, not fun, natural gas. See how we traded above? There's a little swing right here. We gapped up, traded, but we actually gapped above it, traded down inside it. So if we trade all the way down into here or here, and then catch the reversal, this would be the swing for continuation on the upside. Coming back to old highs here at 1808. So that's what I'm looking for here. Looking for this to hold. You don't want to see the low get taken. If the low gets taken, we trade back into this, then we're going to head back down again. Which would coincide with the oil prices being what they are. Okay, let's get back over to here. Oh, let's look at the micro S&P. We haven't looked at this one here either. This is a 4-hour chart. See how we traded the 4-hour? You have one that goes long and this one here that goes short. So when you have one and you're in a trend like this, we would assume that the one that's supporting longer trades, looking for the ideal entry, which is right here, it trades to you and closes below you. You go, oops, I'm on the wrong side of this. And it goes, boop, it gives you one opportunity to get out right there the next day before going lower. Then it comes back up into it again, wicked up to the swing lower. We need this to go higher, this one here to go lower. We've got confirmation that we're going lower. We need to break through this. As soon as we take this low out, we need to see us break through here on the upside and start going higher, using these two as leverage or support to continue pushing higher. So right now we're bearish in this. I'm more bearish overall than I am bullish. You got confirmation off of here, and you've got confirmation we broke the downside of this. So looking for low lows here. That's in a 4-hour chart. So anytime you see this, you're getting close here, and you've got these reversals that are staring you in the face, wait for your setup. Wait for a nice little ideal setup here where you see something distinctive. There's nothing on the opposing side. You got a body that breaks above it. You have to wait several days for this to come back into that level to give you your fair value gap entry before you take out inside this range. Rejection block, old high. Then it gives you another opportunity to get back in right here. So you would get to pay yourself all the way up there. It reverses on you, comes back, cleans you out if you're doing your trailing stop loss. Give you another opportunity to start your trade all over again a couple of days later. And then if you wait for this low, get taken, reversal, body finally breaks above it here. You don't get a continuation. You don't get a drop back into it. So you wait for the next high to get taken. That high there gets taken. We get a reverse back into the candle that initiates this run, which is your breaker up here, taking out that low. You come back inside it here. Continuation. So all right, get over here and check out who's with us this morning. Hans, good morning. And Shepard, Paul, hello. TP, Tommy, how's it going, buddy? Hans, London low, equal lows. Yeah. We're going to trade below here. Let's just wick below the consolidation. I got to get in below this stuff here. Take this candle out on the downside, then looking for the run down into here. That fair value gap is now filled on the 15-minute. Tony shouting in capitals, please hit the like button. Thank you, Tommy, but there's a lot of people, they haven't seen anything yet. They're not going to hit the like button until they see something they like. So that's okay. We're up to 812 people. Welcome another person who joined in yesterday. Welcome, welcome. Who was it that joined with us yesterday? BP, British Petroleum, joined us yesterday. Or my good old friend Blood Pressure. BP. Morning, Russell, Tim. Good morning, Erica. If you use Rhythmic, be careful. Apex said it's glitching right now. I don't have Rhythmic. I have the ThetaWaveTrader one. I got mine too in ThetaWaveTrader. So 1 minute, look at this. See how we got all these lows taken out here? Itchy nose here. Oh, itchy nose. You know what that means? When I have itchy nose, money, money, money. We got some money coming. Watch this here. That's my wiggle room. And I suppose you can go down here. You want to see these stay open as breakaways, go higher. So watch, see if it trades above here and then run back up into that array there. So pulling your fib tool, looking where you are at right now. If you say, well, I'm going to jump in on this as a reversal, you're already over the 50% mark. So what you want to see is this trade up into here, a body above it, then come all the way down into the bottom here. That is not a trade right now. But you want to see it stop right there where it just stopped and snapped off of it like that. That's what you want to see once we get this break, come back to that ideal entry to go long. See, it's the level of sensitivity right now between the high and the low. And I love the fact that we just came back, tapped it. Nice little reaction off of that. But now this is all kind of worked in here, right? You've worked both sides of it. So now you've had a body close above it, right there. You see that? It came back and tapped it right there real quick. Now the only place you're looking for is a run up here, and you're already in the premium range as it is. So just kind of watch price action right now and just kind of look for this as an objective. And then if you start eating through that on a close, then look for higher prices. It would have to get all the way down into here now that you've traded above that for the optimum entry. But don't forget, you got a fair value gap here and a fair value gap here. So whether or not you want to use that as wiggle room with your 1% down here, it's up to you. You have to make those decisions real quick in a 1 minute chart. So we'll just kind of watch it here now. Keeping your eye right here. Wait for the range to finish building itself out here first before you start thinking about entering. That should be around the 50% mark right there. Remember, if we close below here, change in direction. You have these objectives to aim for. we trade inside here and work our way back out, look for a run back up into that level here. Morning, Derek. News at 10 and 11. Gonna have to wait for 10 o'clock, take out some highs. Wait for the range to build itself out. A little clearer on the 1-3 minute. So you want to see that close above here then in 38 seconds. You want to see that close above that. Find some support to run back up into. You have a little tiny one sitting in here. Yeah, there's a little sippy sitting right there, or bissy right here. Three, two, one. There's that example we talked about where it literally closes right on it, opens, and then starts moving. So, oh no, I think that one's actually a little lower. Sorry. I was looking at a different one. That was the Stibby on the 1 minute. Look for your premium array there. Go back into my 1 minute. It literally closed right on it there, open, and that's our premium array up top. See if it meanders its way back up there.
Don't worry.
It's a mess. This drywalling and everything, don't worry about it. Okay, where were we? Hi guys, can you tell me how many is 10 handles? Is it, for example, yes. That's exactly what it would be, Bam Bang. That's what 10 handles is. 10 handles would be from 750 here to 760. That would be 10 handles. So again, we have a premium one and a discount one. If we trade through the discount one, chances are we're going to go for lower the discount lows here, these relative equal lows. If we go above the premium, then we're looking for a run above the highs there. We could just bang around inside here for a while till the news event comes at 10 o'clock. And then we get a run on liquidity. Whereas there's a pool of liquidity above. We've already ran out all this liquidity down below us here. So we might see a run down into here and then a push up higher. It's hard to say. There's a lot of downside. Morning, Abs. How's it going, buddy? Russell, good morning.
Will you be putting this in like a living room?
So you can see how we're just sitting inside this discount launcher. We've clearly broken the high of it. So we can sit anywhere inside here. And this is just waiting for the news release. And then so give me your perspective. What you guys think? Is this a run? Initially, watch with the news release. We're going to see where the first initial reaction is. And then we'll see if we get a bump up higher. So if we go bump down, it goes higher, then it drives down after all the news release has happened. See, there's the ideal place to put your entry. And if you're wrong and it trades below you, comes into you. But a news release, you could just flash like lightning straight down. So watch this level here. And then watch, see if we get some sort of reaction off of this level. We shall wait for this news event. It's like Crouching Tiger in here. So are you building a house from scratch there, Abs? Or are you just helping somebody doing some repairs in a house? Because, man, I could use your help here. I finally, after 5 coats of drywall or mud, I finally, okay, here's 10 o'clock. Five coats of drywall or mud, I finally got it smoothed down to where I'm happy with it now. Now I've got to try and work the other corner. I've got it on the corner, so I've had to float this whole side out. Now I want to see this other side. I've got to start. There's some little imperfections in there that's driving me nuts, so I got to get in there and sand those out. I'm creating so much drywall dust. There's nothing worse than having drywall dust in a house that's already been made, because it gets everywhere. It's fine stuff. So it literally covers everything throughout your whole house. You're breathing this crap in all the time. So I try to get this drywall or mud that's actually not. It says it's reduces the dust. So when you sand it, it's supposed to just come down and just sit heavy on the ground. It gets everywhere. So that was initial reaction. We saw a pop up, then a run down. So that first initial pop up, we'll see if that's the direction we end up going after we have a little Judas swing down here, manipulation. But we are sitting in a holding pattern for sure. At 0%. That's interesting. Building it from scratch. Just got the foundation done last week. Long way to go. Oh, God. I remember building my parents' place. They got this 5 acres of land, a farmer's field. My dad welded together a rock picker. The man's a genius with a welder. He's a body mechanic, so he's really good at welding and stuff. He built this rock picker, pulled it on the back of his 8N tractor, and went to town on this field. We flattened it all out, picked all these rocks off, had to dig a well. We had someone come in and do framing on the house. They built the frame. And then from there on, we did the rest ourselves. We had someone come in and rough in the plumbing. My dad did all the plumbing underneath, lying on his back under the house, because we had a crawl space. We didn't actually have a basement in it. So it was a crawl space. And drywalling, mudding, vapor barrier. Then the insulation in the roof in the summertime was just brutal. Absolutely brutal. The heat was nuts. Big 12-foot sheets of drywall on my back, trying to hold it up. Couldn't see a damn thing. My dad's like, go to the left. I'm like, which left? Your left, my left. My mom's trying to put a T-bar underneath, trying to keep the drywall up. Man, that was an ordeal. I don't envy you there, Abs. I get frustrated just by a little piece of drywall I got to do and mud it 5 times. Imagine if I had to do a whole house. You'd be retired waiting for me to finish mudding. But obviously you got the skills, man. So good for you. And bless you for helping people out. That's awesome. DeMilo, good morning. Let me have a look this morning here. Yeah, there was the 8:30, the 10 o'clock was the pending home sales. That's a red one, Derek, at 10 o'clock. That was the USD pending home sales. Actually, minus 7.7%. Forecast 1.1. Previous, oh man, it was lower, way lower than expected. Yeah, this is what I got on Forex Factory. Derek, is this Thursday, 10 o'clock, pending home sales. That was the red one. We got another bump above. So far, as you can see from this inversion, or this fair value gap here, that's been reclaimed many, many times. We've come back inside it. Oh no, I guess we've gone this way. So it is considered a reclaim or inversion now. We've run through it. We'll come back inside it. You want to find some support. So we went all the way through the other side of it. We're still finding support here for a continuation. It's weak. It's not. It's really been worked hard here now. So you want to see some really bold candles get out of here now. Start pushing for this premium array inside that range. You see it on investing.com as a 2-star news event, but also talking bullshit midday. Ah, Christoph, you make me chuckle. Abs, let's see if it wants to close the order block gap. We are exactly in the middle of the candle of the Dow for tomorrow. Fed always talks bullshit. And Q and S are not coupled. Volatility is increasing a lot for June. I will not be astonished with 900 points movement soft. So for the Dow in one day in June, Monday the 3rd. For the Dow, let's have a look at the Dow. Looking for silver bullet time. Geez, there's nothing in here that I'd be interested in any silvery type bullets, except right here maybe. That's a 1004. If you come down into this to go higher, look for, there's a gap right here. So if this is the reversal back into here, order block. So you've got your low taken, fair value gap, trenched above it. Look for the support here. You look for that to go higher from here. come all the way back down into here. If you trade below that on a close, four, three, two, one. Yep. Now get out. Going for the low. So you get one opportunity to get out right there. It's going for the low. And you can see that as it's happening, you can see that you go, okay, we're watching it. 4, 3, 2, 1. Oh, no, wrong side. Quick, wait for it to get out. Now get out. You see it going lower. That's a hallmark sign right there, I tell you. It is so much more reliable than people give it credit for. And then you say, okay, if I want to get back in sync with the market, you try to get, oh, I'm wrong. I'm going to put, if you're one lot long there and you go, I'm going to go in 2 lots short here. So that will instantly close out your long and put 1 lot in short. Unless you're on an MT5 where you can change both, trade both directions if your broker allows you that. Looking for these runs down on this liquidity below you here. Right back into here. That's been worked. Let's come back, give you a nice perfect fill here. You want to see it react off of that, leave that open now. Come back to the midnight open candle. Sure. Where that closes in the next 45 minutes is important. So if this just becomes a big wick back up again, right off the session open. See how it traded below it right there? Give you the indication, oh, we're going lower. See that? Body trade just below it, came back up, tapped it. I'm going lower. Run the lows. Now you want to see this get taken to the upside. Now if you just run those lows out, come back to that New York Open midnight session. Whether you turtle soup that or not, you're a little braver than I am. If you believe it's going higher. Right now it's going lower. That's the little, I'm tipping my hat right there. Check out 1 hour NQ, that order block. Yeah, the 1 hour was right here. I do like the open session there. I'd like to see that just keep ripping all the way back up here again now. We trade back into the reversal. Take this low out. We traded through the reversal. There's no little candle that initiates the run here. There's no upward candle. So you got to expect a return back into here. It came all the way down and through it, but we're not closing right now below here for a further continuation on the downside. There's one little piece available down here, which in all likelihood will come to drive down there and clean that out. It's more than halfway through that mid, like the consequent encroachment of this busy. But I'm all right if it continues to snap back up there. Now that low's been taken. Look at this one here. Let me move this to here. Now what would be really nice is if we see this blast through here, come back, find some support at this one, and then run this high out here, get some support off of that, and continue pushing higher. We do have a reversal here, taking out these highs. Body trade's below it. You can't get into it here. So you look for this candle to get taken on the body. There's the downside. We come back up into it here. Right there. Now, whether or not we react off of this one to come back down again, or we close above here. Ideally, I want to see this close above here. Get back into a higher prices to clean this lot out. But if we react off this candle here and come back down again, as soon as it closes below there, we're going further. So right now we're inside this candle. Inside the 1st of May opening candle. 1st of May opening candle. First of May opening candle. Which one are you looking at? It's nowhere near the 1st of May. Oh, 1st of May in Dow. Yeah, the fact that it traded through the midpoint of that was see that the mean threshold of that candle, we traded below it. We went through 3 arrays in one. We went through 3 arrays in one, so that when they say that Michael says you get 3 arrays in one candle, your ass is next. So looking for these lows now to get taken out. Yeah, looking for the lows to get taken out. That's what we didn't want to see. See that? Just came back up, hit off this guy here, starting to run back down now. Now you're literally holding on this candle here. If we trade below here, we trade below here on a close, you're looking for further downside. See how it just came back inside that thing again? We're playing silly buggers like we did over here, running around. Let's get some momentum here. Just keeps running up and tapping both sides of it. The fact that we just clean these the liquidity out below the market here, and we've got a pool of it sitting right above us here. That's where I'd like to see it run. And then we also have a pool above here, and then above here as well. The fact that we're eating into this candle, nice and positive. I love it. I love it. Dave Barry. How's it going, Dave? Any ideas on this for the 1st of May? Yeah, I think it's for this Dow here. This April 30th candle. I don't know why you're looking at the May 1st candle. It's not the May 1st candle. It's the April 30th candle. This down close candle here. This is your breaker. It's the last down close candle that runs out these highs here. So we have this swing below price. So it's this April 30th candle you're looking at, Christoph, and we've worked all the way through the mean threshold of that candle. We come back, we've tapped the mean threshold, and now I'm feeling like we're going lower. We're inside this little imbalance here as well. There's multiple little imbalances in here. Look at those levels as well, because I wouldn't imagine we would just come down to just below this mean threshold here, reverse, and drive all the way back up again. I feel, here's my, if we're going from array to array, this is kind of like where I'm looking at here. That's the box I'm looking for it to land in. If we trade below that box, that's where the carrot's going right there. Touch the box, anywhere on the box or in the box is where I'm looking. So I'm trying to do one of those things Michael did back when we were first starting out, looking for it to land in the box. Today, tomorrow, this week, we should land in that box. If we close below that box, we're taking the lows, obviously. And it's not going to just be a flat bottom. They're going to run the lows and then look for further liquidity down here. But if we stop right on there inside that box and then start reversing, that's what I'm looking for. That's the only thing I can give you right now for Dow. We did the same kind of shenanigans here, trading above it and then working it, then slamming through it. We're trading above it again. We're coming back inside. More shenanigans inside here. Again, now that we've taken out this low, like we did on this one over here, unless this is one of those 3 drive things where they drive down 3 times and then finally reverse. But right now, I'm bullish until we take out the low there. Like this one here, we just tap below it and then said we're going lower. We get the same kind of thing here, then we're going for these lows here. Otherwise, all this liquidity above the market is still reachable. Five-minute chart, there's your fair value gap there on a 5-minute chart. You want to see that get above that. Now that you've taken these lows, you want to see it get above that on the close and then start pushing higher into this range. Oh, okay. US 30, the first is May. What is May? Now this is an immediate rebalance here on the first here. See how we just come back, we immediately rebalance it, come back and then drive through. So that immediate rebalance, usually you look at that as a fair value gap. So if we just come down into here, right where it's sitting right now, that low that it hit, if we get a reversal off of here, my box doesn't come into play. And then start getting a reversal off of that spot we're sitting right on the very low right now. This is one of those watch days. Study price action here, study price action here. That's why I've got the box there from that guy. Premium, discount. Unless this is the premium and this is the discount. Fulfill. It's a rebalance and then come back into that range again. So look here, if we close below this, we wick into that. We tap that one more time with a wick and then close right on that. Then start the next Friday on the reversal back into the range. 1, 2, 3, 4. So do your TGIF Friday. Your TGIF Friday would be your take your last 5 candles here, pull your fib range down, and if this is the range we're sitting at today, Thursday sets the low of the week, and then Friday we start to pull back into 20 to 30% of the range. Look for a reversal to happen today or this afternoon, or this morning or this afternoon for the low to get set, and I'm looking for a low here and here now. Meanwhile, back at the shenanigans in the ball. Yes, it does. That midnight candle, I tell you, it's critical. That was a nice piece of information Michael passed on to us for sure. The same as Sunday's opening candle, where we are relative to Sunday's opening candle. We had a silver bullet on NQ, right? Um, well, there's a silver bullet at 10:05. If you use the very first silver bullet after 10 o'clock, that one didn't work. This one is not hit. That one's not hit. That one's not hit. So I don't think there's a silver bullet at 10 o'clock yet. Because this one to go long, you didn't get it. You would have been, your stop loss would have been taken. This one here to go short, you haven't got it. You haven't got it. And this one here, you know, how many guesses you want to take it a silver bullet? So it's the first one or not, right? Or for me, it's the 10-10, 10-12 candle. So there's 10-10, 11. Then you have 16-17 is the entry back into it. So 16 right there is a 16 candle. And you'd be looking for a run below these lows. Stop loss sits up here or above here. See how we close below that now? Going lower. So I guess that one there, if you're looking at the 10-10, 10-12 one that I like to look for later on in the day or in the morning after the initial 10 o'clock one, that first wick of the hour, and then the body starts to manifest. So this was the shenanigans we had this morning around the reversal. It would work it, come back down, and then bust through it, give you an indication I am going to keep going through. Same thing again. Shenanigans, we're going to go higher. We bust through, give you an opportunity to, you don't even get a chance to get out of that one. It just pops through and you go, as soon as it retraces back and taps that again, you're out. Stop losses here. We're aiming for this low now. This might be that 3. Drive down and leaving all this liquidity up here. Trend line people are saying, hey, it's just a trend line right here. What are you doing? I'm seeing silver bullet to the upside after it took the 9 o'clock low. Silver bullet to the upside. No, I don't see anything there. Sorry, Craig. Yeah, we're close. We definitely closed below that level here. There's your 3. So we'll see if we get the same kind of, how many times can you get suckered in on this and people just say, I'm not trading that higher again. I'm not going to buck the trend down. They're just running out the liquidity they found here. Let's look at the 15-minute here. So look for this run down into this level here now. On the 15-minute discount rate right there. Oops. We could get this slow, insidious pop down. We'll see what kind of reaction we get out of here now. We came into this fair value gap here. Yes, an NQ may want to and prove there's been a change in direction. Take out London's low. ES, did you say ES and NQ? This is ES here. That's your regular trading hours, the gap there. So you figure it's coming down here, Derek? And take out those lows. Australian dollar still climbing nicely. Let's get back to here. Keep your powder dry. So that was the continuation we talked about here. Just traded back up into that candle. Reverse. Now trade back up into this candle. Reverse. I'm trying to marry the idea of wanting to go higher, but obviously it's just keep showing you, nope, I'm going to keep going lower. This was the London low. Oh, we're not even there yet. Yeah, London low right there. Just took out the London low. Nice call, Derek. Well done, Derek. Well done. Good call, buddy. You're on fire this week, bud. And last week. You're just burning up. Check yourself for fever. You're on fire. Now, do we trade back into this here to go short? Or is this just a reversal? Reverse direction or continuation, not reversal. Continuation on the downside. Lots of liquidity sitting there. Work on a smaller time frame sparks me on. So helpful to me. You just got to counter trend whatever it is I'm saying there, Derek, and get you in the direction you want to go. We have a new day opening gap on May 16th below price. So I'm not trading for that, but wouldn't be surprised if it goes into the 18,642, 18,638. I've had I've had and have my share of losses. This channel has so helped me see things I didn't see before, though. Down side option. The next macro begins. Right now, we're still bearish below this version. Below that fair value gap over here. So I'm just wondering if this is a turtle soup below that London low. Or we have, let's look at some. We get all these out here. Now I've traded below here looking for further downside to 18,632 to 18,661 or 621. That's liquidity sitting below us here. Further down. Coming into 10 o'clock now. Or 11 o'clock, sorry. 11 o'clock. Going to its equilibrium line. That's okay, Chris. What you're feeling is a perfectly normal level of distrust and fear. When you see it enough, it's just going to take you enough times to see it and convince yourself that when you've seen it enough times, you start to put some faith in it. But you know, you gotta see it first, I suppose. Enough times. And then really low leverage to confirm it. Like trade a lot of micros to really confirm that, you know, what you're seeing is something you can rely on. Otherwise, you're going to beat yourself up a lot. Don't get into the mindset of beating yourself up. Kind of look at it as the mindset of, yep, I see it. Celebrate that you saw it. Celebrate in your mind that you saw it and not the anguish of not trading it. Get more focused on what you saw that was correct versus beating yourself up for not getting in it and feeling frustrated by not getting in it, which is probably the main idea of what you're focusing on right now, is the frustration and what you're lost instead of what you saw. I did that so much, and I continue to do that still, but I'm hopefully kind of tapering that over time. The more you see your setups, the more you see proof that it's changing direction, the more you see that confirmation over and over again, the more confident you'll start to get. And then you put a little bit of micro trading in there, or paper trade the snot out of it till you feel comfortable with it, then micro trade that on the live accounts when you're ready. But if you're focusing on the frustration, that is really what you're going to continue to get more of. And you try and think about how you're building that inside your mindset. You're telling your brain that yes, you're you're seeing great setups, you're picking them up, and you're rewarding it with negative feelings of frustration. They're conflicting. You got conflicting emotions going on, or conflicting emotional support and chemicals going on inside your body that doesn't support a positive read that you're seeing in the market. So when you see a positive thing, get excited. Try to find a way to get yourself excited about seeing what you saw and not the frustration of it. Otherwise, those are conflicting. They don't align with your neurology, and you'll continue to get frustrated. And when you see something that you know is a certainty, you'll go, why am I not taking that? Because you reinforce the emotion, the negative emotion behind the conflicting positive entry. So you got to get those in alignment. I tell you, otherwise you'll continue to get this. You'll be battling this, Craig, for a long time. You'll be battling that frustration, trying to align the psychology behind your trade. That's my guess of what you're doing, because I've been there. I know exactly why you feel that frustration, and all you do is reward a positive trade with frustration, and you'll find yourself continuously going, why am I not going in this? Why am I not going in this? Because it's the fear that's holding you back. Yes, I hear it, man. I'll try to be bored. Not trading above that, trading below it, come back, find support at it, continue on the downside. Here's the 11 o'clock. Take the lows, then come back into the range if that's a typical 11 o'clock day. You get back to 50 to 72% or 62% of the range. Going on to some of these other ones. First, bullish out of here right now. Equal highs. Dixie heading down. I wanted all these guys to go up. They're heading up. Positive on them. Should have traded Forex this morning. Upside broken. Come back, find support. Upside a breaker. Hourly. It's finally filled. So if that American dollar continues dropping down, we've got a little hint that we're going to go higher. Now you're going to go lower. If we close below that in the next 3 seconds, 2, 1. Back into the range, look for this level down here. Oil's still giving us a run down. Gold's taking that 50% of that whole range. Reverse here. Equal highs are taken. 1560. Right back. I'm going to head to the bathroom. I'm just looking at this right here now. It's just a small little reversal. We've had multiple drives down now, and multiple attempts to get back above that. So I wouldn't be bullish until I get above a break in structure here. This is still downward structure. So if we break this high here and that fair value gap above you, ideally this order block here, then I'd start getting more bullish. I'll be right back though. 150. 622.50. I'm just going back and just having a look at all the places that we were looking for. Oops. There's that one, and then there's this one. Go back and study where everything was clearly showing you lower. I kept wanting to go higher. I kept trying to marry an idea of going higher instead of no, we thought this. Here yet. Yeah, I don't know where Derek's equilibrium is right now. Let's talking about the daily, hourly. The whole time we're staying above here. We have a little shift here. I like to see it break several times, I think, to get the confirmation. Otherwise, we're just in a consolidation here. for this level here to provide me some support. Well, the Fibonacci, I'll have to some work on ICT theory. I use equilibrium almost every trade, either by drawing an eye, key facet of my trading. Yep. That Fibonacci is a wonderful tool. So now you're looking for this is the 11 o'clock back into the range. $50 to 62% of the range. Break, small little break in structure here. Another break in structure here. I like to see them sweep these highs now for lunch, going into lunch hour. Take all these highs out here. And we'll get a better feel for that once we start clearing this out and getting a real significant structure break up here. If we can break this to the upside, then look for the liquidity above the opening of the day. Chris, I don't know if you're in Michael's mentorship uh, channel, his Telegram channel, but he just quoted two things for you. Not you directly, but exactly on what you mentioned earlier. $50 line. I guess you'd have to pull. I'm pulling it from the whole range. Yeah, that's the 10 o'clock range. 9:30. That would be the 9:30 right there. I got in here. I got in. I saw the reversal here, but I wasn't going to be convinced until I see a break in structure to the upside. So I got in here. We came back and retested the high. I got in here for a long. We broke this structure, broke that one. They're not super strong. I'd rather see a bigger break in structure like this. So I'm more convinced. So I saw the reversal here and I got in right here off this retest here. Higher. And this fair value gap now broken through. It's providing support. 50%. So my trade will go to break even. My stop's down here still. I'll move to break even as soon as this 50 gets hit. Right there. Now I just want to see if this goes to 62. This is just the retracement we're expecting around 11 o'clock to 50% of the range for the day. Ideally, I'd like to see it keep pushing up higher now for lunch hour to start taking out the liquidity that's sitting. There's big pockets of liquidity sitting here now, so I'd like to see it continue to run. If it just rolls over and comes back down again, then so be it. I'm locked in profits here anyway. Good morning, Justin. How are you doing, buddy? Getting ready to go into lunch hour now, so just want to see a steady climb here now. Just a slow grind up like this. And welcome to lunch hour. Starts around 11:30. But ideally, we want to still stay above this level here. It's above the bearish order block. So what we have here at 48.50. $18,730. I'd like to see it get above that, get into here. Take the liquidity, it's sitting resting above here. Here's where the mixed macro begins. You're going into lunch hour now, so. It's interesting how you can see these levels are open session levels, key levels to hit. Roll over, hit them, react off of them, bouncing around on it. drive through it, back to it, through it. You want to see it get on top of it. Find support at it. Look at that, multiple times tapping it. Returning in copper or cocoa, or returning to here and going higher. It's a nice short here in corn. Trade back into it. Return back to the old high. Now I'm expecting to see some sort of reaction off of here now. Key levels are what? Look at that, multiple times tapping it all the way up to the previous session. Like right on the money there. Keeping an eye on this level here. Trade through it. So we just closed below it. Going short again. Just that retracement from 11 o'clock to the 50% range, and then the continuation. Don't want to marry the idea of going too high if the price is telling you something different. You got to break above this high again now before thinking about going up higher. So I was with you, Justin, for higher, but now I'm bearish inside this range here. You had to get above here and here again to go back up higher. So we'll watch to see if we trade through the other side of this. Above again. So now you're bullish again. Right on that support there. This is a return back into the breaker. So little swing below the lows. Look at this one right here. Body breaks above it. You don't get a chance to get in on it. So you wait for this thing to get taken out on the upside. It does, comes back, taps it right there. Continuation. Old highs. Watch this. Now I like to see something like that. To that run for the liquidity above the market again. Running for the upside objective for me for the day. Back to find support at this order block breaker here. We're in a deeper range, so premium, your discount one is here. Inside that reversal. And then you obviously have this one here as well. You want to see this stay all open here and just push up higher. But it's lunch hour, so chances are you can get a run down into here inside that range and just consolidate in here during lunch hour. You're bouncing off the 50% of the whole daily range here that's been created. is the fair value gap at 18,704. This one here, 18,704. Is this valid to take? So as to take a trade down. And not without confirmation. Otherwise, you could just be looking at a reverse or just a drive straight through it, looking for liquidity above the market. Though that could be a great place to take profits at. Don't always try to pick the high. You got to look for, wait for your reversal to happen before you decide to go short inside a range. So John, if you're just picking this 704, if this is the one you're talking about right in here, 704 fair value gap, or if you're looking at this one here, one that marks the 704, I'm not sure which one you're talking about, this one or this one, but either way, wait for that reversal to happen. So if you were looking for this to fill and you looked at that for the reversal and the body trades below it like this, trades back into it, short into here, smaller range. If you trade above it, again, your ideal entry would be short right there. And if it doesn't work and it trades through you and comes back to you, you break even and get out there before your stop is taken. So you're in the short territory inside this range here. Now you're extra short if you go through this fair value gap and close below it. Then you're looking for a deeper run down into here. So this is kind of like your linchpin for longer or shorter into this range. And you've already traded below it. You're back inside it to go short. So you expect to go shorter into this. Anytime you move into a fair value gap like that, you take out an old high and you look for this kind of setup for short. These highs were taken. That fair value gap's not even completely filled, just shy of it. But if you take out a high, look for this. Now, whether or not you want to 91 to, still potentially 15 handles right here from there to here. Your fib tool from here to here. Look at the range you're in. You get your reversal here, trade back into it here. Looking for a run back down into, well, 50% puts you right here, that whole range. 50% puts you, so there, 50% you're taking profits there. If you get the trade on again, take profits here. This is a buffering type of thing. During lunch hour, you might be able to collect a lot of these where you just come back up, put the trade on again, trade back to here, take half of it off, put it back on, take half of it off, and then just keep working it back and forth like that, all inside here. Any one of these three areas to take a portion off here. If you trade above it on a close, take your stop out right there if you trade above. So you just watch this, how many times it buffers here in this area back to 50%. You got 47 seconds. If it trades through the half of that, close it out before your stop loss gets taken, because it's got some aggression. Right there, get out. Doing this long for here and here. There's your stop up there. It's taken already, obviously. You can see the value of paying yourself at 50% of that range. If you were short on that from here, it came back through you. So whatever you took for profits in here, just gave back in stop loss run there. As soon as you hit the 50, close out, whatever you made there is just given back. That's the reason the buffering is kind of a great way to protect your stop loss. If you thought that that was, John's thought that your high was, or that fair value gap there was your entry, and you wanted to go short, you put yourself at 50% of that range. Make sure you, if you load on again, then so let me just reiterate the objective there. If you trade this one and you took your trade and went short to 50%, stop loss moves to break even. You take off half your trade, and then 10% for each level down. And then as you come back into that, you would have broke even. So you'd be 50% of your trade you'd have. And the moment it trades through you, here, if you entered in again here, traded through you, through the mean threshold of that candle, you'd be out in this distance here before your stop is taken. Or if you did wait and then got a full takeout there, you got a smaller loss versus the little, or the major loss you would have taken without taking that 50% there. Again, that's a fail-safe thing. If you haven't developed a fail-safe, then you would have taken a full loss on that for a short. I'm moving this thing into stop loss almost got taken here for the original entry. I think I got the original entry here at break even, 50%. Still going higher, looking for, again, higher prices up here and here. I think I'm gonna move my stop up behind here now. Now, if you pull your fib for the whole from the 10 o'clock or the 11 o'clock reversal that we call every day, we look for it anyway. There's your 11 o'clock. There's your reversal at 11 o'clock. Now, here's where you go. I traded above it. Ideal entry here. Trades below you, go, ooh, I'm on the wrong side of this. You wait for it to trade back above you again. It does right here. Right there, it trades above it again, and you don't get an entry to get in it, so wait for this order block here to get validated. So you close above it right there. You trade back into it on the next candle here, and then get long there. So look at this one here. Inside that whole range there. There's nothing in here. If they come through here, look for this down here. And if you break structure here and here, you're looking for further downside. A lot of quick action today. See it get through here. It's 50% on the day. I think I took that from way back up there instead of the 9 o'clock. That's 8:45. There's the 9 o'clock opening there, so from 9:30. Well, I think I gotta get going and do some drywalling. Just stuck in lunch hour here, so kind of keep your eyes on those levels. Look for inside that range of discount. Run all the way down into here. Not that I'd want it to. I'd like to see that hold. If we do get a run down into here, that's your line in the sand for a short. Or for longs, I should say. See if we break this low here. There's a little imbalances right here. Okay, that's it for me. When you at, Derek? Lunchtime, we will move above equilibrium still as a premium. I wouldn't simply enter and sell at that price. We would want to decide, move away. Dean Pham, just feel so nervous about this trend. Kind of scared. I don't know what to do. Don't do anything. Don't do anything. Don't take a trade here. Don't mess around, and especially lunch hour. This is high resistance stuff. The best liquidity was found this morning. Don't mess around with this stuff. Wait till after lunch and get your bearings straight, Dean. Don't. If you're nervous, you're trading on the wrong kind of energy. The wrong kind of energy. You're trying to force a trade, you'll end up taking a loss. So, don't do that to yourself, man. Just give yourself a break. There's plenty of trades coming. Every day there's something new. If we don't get it today, and we're coming to the end of the week as well. So don't throw away all the profits that you made, or, don't try to reach for something and say, I have to get profits if I haven't traded much today or this week. Then wait till next week. You got to have patience. I tell you, that is one of the key things for your level of trading. You have to be absolutely patient and wait for your ideal setup so you feel more comfortable. So like Derek says, there's been one standard deviation. I guess we've got there. I don't know where you're pulling that from, Derek. Yeah. Okay. That's it for me. I'm kind of losing focus of this anyway. So we got more downside here. See how we traded below it here, back inside. So like Derek says, you might have one standard deviation here. Watch your stop loss. We could be running through this. Take out the stop sitting below here. That's the linchpin for this long or short right here. We're just coming into a discount array. They're all holding up right on that imbalance sitting there. Bodies are respecting it. So I want to see this really start to lift out of here now. And if you get a revisit of this, then it's down into this muck down here. Get push, push, push. Get back up on top of this. And then you got to get through here. That's ideally where we're just looking for that little body to sit right in there. Wicks do the damage. Didn't take this low. Inside that range, all the way down into rejection block. Back up, just tap that right there. See that? You got this, oops. You got this one for a short. It's a lot of resistance, a lot of mental focus. You have to stay really focused on that. And if you can protect your money quick, and or just don't even be in this. This is just sloppy material. This is sloppy. You do not want to be in mucking around in this. If you are in it, keep your stop loss tight. And if you can get yourself into profits, get yourself into profits, and kind of really monitor these ranges here. If you got in off this reversal here at 11 o'clock and you're working this, stop losses here. If it gets above here, then you can consider this stop loss down here and use the leverage and support of these fair value gaps to help give you some support. If they start eating through those, then we got to run through the liquidity here, but you got to get above the market here to remain more bullish into this area here. Otherwise, we could still get a slip down into here. And if you lose this, then, you know, the range down into the consolidation down here again is quite possible. But all the time you're in the 1 minute chart, stay above here. You got my ideas of what I'm looking for there anyway. So like anything fun in life, make sure you're protected. Make sure you're well protected. Protect your stop loss. And I will. What you got in here? Dirty CD on 1 p.m. We will have equal lows now. Thank you. I think we would want to get out of the way today. At this point. Yeah. Now you're above it. Good support. These are little buffers now that support your buffering, or you're getting a little bit of padding here now, not buffering. This is more like padding for further upside. So you got to get through here, get more up padding in between you and the free fall. Get through that. That's the next little area you're looking for to get through. Mean threshold of that candle. Start climbing through that. There you go. Find some support at it. Look at that. Just opened above, closed above it, tapped it. Now you want to keep seeing that grow some legs now. Get out of there. So anyway, you got my idea. John, do you live stream every day? Yes, I do, John. You're welcome to subscribe. You can be part of the 800 club. We got 814 people in here now, and we're happy to have you. Pop on in. We reprice action every day. on the weekends. We're on our Telegram. There's some dedicated, crazy people that don't know how to just sit back and enjoy life. We like to trade charts. The Bitcoin, we play in Bitcoin on the weekends. It's the only one that's available for us to play in. So we practice in Bitcoin with demo dollars. And yeah, so you can meet us up in there, John, on our Telegram. It's up in the link above. But until then, tomorrow, I will see you guys bright and early again tomorrow at 9 o'clock. And if, Derek, are you doing anything this afternoon? Are you out golfing? What are you doing? Derek's answer here before I get out of here. Nothing for me. Way too much fun and profits in the morning. Yeah, I woke up to some lucky. Tooth Fairy was in my trades this morning, so I'm not risking any more. I took and I'm banking here. This is kind of like I took a loss or two here, and I'm just trying to recoup that now on the way up. This was very clearly going short, and I kept marrying the wrong direction instead of just looking at this as just the reverse back into here. Derek called a good one this morning, so good for you, Derek. Way to go, buddy. I'm recouping this here and hopefully come out with some profits this afternoon. If that continues to work its way out, then great. If not, we're just going to try and minimize a little hit I took this morning there. Yeah, so anyway, I will see you. May hit a bucket of balls or two this afternoon. So he's not Derek's not in this afternoon. If it's starting to clean up a little bit and looks a little clearer, I might pop in again in an hour and a half or so, and we'll see how this kind of pans out. And if not, I will see you guys tomorrow morning at 9 o'clock, bright and early, New York time, which is 7 o'clock Canada time. So I will see you guys bright and early. John, you're welcome to stick around and pop in and see us on the Telegram. There's a lot of people in there regularly, all the time. Share your charts, share your knowledge. There's some awesome people in there that are willing to help you out. If you're starting out with ICT stuff for the first time, post your charts in there. People will help you out with them. Don't feel bad if you took some losses. There's people in there that take losses, and they're not afraid to admit it, and they're not afraid to share their stuff because they get help there that they need. Nobody's in there beating you up emotionally. Everybody's there to support you. So if anybody's mean or ill-spirited, they're gone. So pop in. And if not, pop in here in the mornings and just watch us trade some price action. This is really super sloppy. We want something that's much cleaner. Like Bitcoin seems to be a lot cleaner, even though it's not looking so clean this morning. Usually you get some nice good returns. Nice good. Yeah, this is all crap in here. But anyway, the markets have been rather excellent this morning for downside viewers. And this reversal at 11 o'clock, it seems to be hitting the levels that we're looking for. So anyway, we're looking for higher prices for this afternoon, and we'll talk to you guys tomorrow. I keep stalling, don't I? Because I love talking to you guys. It's in the link above, so let me show you. You go over here, see where it says Twitter, 3 more links, click here, Telegram, click right there. You'll find it sitting right there. Watch that you see how we've traded below here. So going lower inside the range. So if we trade below the discount array here, then you're going for a run for these lows and then potentially this guy down here. So you're in this consolidation sitting here right now. So anyway, that's the levels. Appreciate it. You'll see the Telegram link. Okay, perfect. Thank you. You're welcome, Justin. And we'll see you guys in Telegram. See you guys tomorrow.